Okay, this is a TradeStation chart from ProcessTrading.com's Right Edge trading system, particularly for day trading the S&P E-mini. We're going to build this chart from scratch, and as we build it, we're going to explain three types of trades that you can take: trend, counter trend or contrarian, and discretionary trades. We'll use the chart to identify who is moving the market, precise entry points and risk tolerances, establishing a mean, how price establishes a mean, and the regression to the mean, the long and short intraday trends. Then we're going to look at a better way to read volume. And then we're going to look at how to determine, once you get into a trade, if a trend is in progress and how likely the trend is to continue. We're going to look at the current sentiment of all the traders at that particular price bar in that particular trend. And we're going to look at how to read momentum. Now, these are the factors required to give you an edge, the right edge. And you're not going to get all this information in one isolated indicator somewhere or some black box that pops up a trade. You need to have a system that gives you all this information that you can put together, because all these factors contribute to a successful trade. So let's get started. First, we're going to remove the system and we're going to build it from scratch. So let's do that. I'm going to remove everything that we see until we simply have a price bar. Okay, so this is the price bar for the S&P E-mini, and we're using a 1500 tick bar chart. And as you can see, it would be exceptionally difficult to trade simply using a candlestick chart like this. So what we can do is we can add the TradeStation volume indicator to this chart. So let's do that. And there's a normal volume chart that you get with canned platforms, and in particular this one is TradeStation. And as we can see here, this doesn't really give us that much more information. But just like the previous system that we saw that was on the screen, there are two parts to the system. There's this upper part that has the price panel in it, and then there's the lower section that has the indicators to it. So we're starting with this plain vanilla chart here, and we're going to improve it step by step until it reveals how and why price is moving. As I mentioned before, we're going to be using the 1500 tick bar chart to do it. The first thing we're going to add to our system here is what we call price cycles. Now, price cycles track transactions either by them being larger in trade sizes or larger in dollar amounts. So if you want to know more about price cycles, go to the homepage of ProcessTrading.com, and there's a video there right on the homepage about the price cycles. So let's go and turn that indicator on. Let's find it here. Here's our price cycle bars. And we can see here the price cycles. Prices run in cycles. In other words, here is selling at the top, but here is buying at the bottom. Now, it's kind of hard to tell other than after the fact here, because you can see it's moved away and volume doesn't tell you down here. It's kind of hard to tell, but these are the main point here is that price runs in cycles. They're going to sell at the top and they're going to buy at the bottom. In other words, sell high and buy low. And then over in here, we see these price cycle bars. That's the white and the gray bars. We see an accumulation phase going on. And during that accumulation phase, they're either accumulating orders that are going to allow them to take advantage of price moving higher or price moving lower. And over here, we see a price cycle bar where this is selling at the top, this is buying at the bottom. They bought at the bottom, price moves up, they sell at the top, then they buy at the bottom. Then price moves up, they're starting to accumulate, and we'll see which way that goes. So that is good information about how price is moving in its cycles and who's doing it and when they're doing it by the white and gray colored bars. So it's not so much these are the guys moving the market, but it's not so much who is doing it, but what they're doing and when they're doing it. So now that we've identified that gives us an edge, that gives us a leg up on knowing when to place our trades, but clearly not enough to be successful yet. So let's go and add another component to the system, because we want to know which way they're trying to move the market. So let's do that. Let's add the VWAP part. Okay, this is the VWAP line in this particular system. And VWAP, of course, stands for Volume Weighted Moving Average. And this in particular is a multicolored line. When price is in an uptrend, the normal color of the line will be yellow. When it starts to get extended, it will become green. And when it gets what it considers in an overextended territory, it becomes blue. Like you can see right here, it was normal. Then it started to get extended. It got overextended right here, and there was selling at the top and then buying at the bottom because the trend is still to the upside because of the yellow line. And this is buying at the bottom here, but you're clearly still in an uptrend. And you can tell that by the yellow VWAP. It'll be just the opposite. Let's find, you can, when it's in a downtrend, then you're going to have a gray VWAP line, and that'll be the normal read on the downtrend for the VWAP. Then when it becomes extended, the VWAP will become red, and when it becomes overextended, the VWAP will become white. Just like it went down here, it became overextended and then went back up as a pullback. And you can see it went back up to the VWAP here. So let's go back over to our screen here that we're working on. And so we know now that that is how the VWAP tells us what price is doing within the trend by the colored price. And it also serves as several other factors. It acts as a support and resistance line. As you can see, it comes down here close to the VWAP. And many times it'll reach the VWAP at support and it'll come back up. And it comes down here, comes close to the VWAP as support, and then it goes back up. So it serves as a support and resistance line. And when price moves across this VWAP in particular, it tends to keep moving in that direction for a period of time. It also serves, the VWAP also serves as a regression to the mean line. And we're going to see that in a bit. So it serves those three purposes. It tells us about the trend, when the trend is extended, when it's overextended. It tells us about support and resistance. And it also serves as a regression to the mean line. But we'd like to know when these tops and bottoms are likely occurring. And for that to happen, we're going to need the timing alerts. So let's turn that indicator back on. And we see these blue dots. These blue dots are the timing alert dots. And of course, all of this happens in real time. There's nothing lagging in any part of the system here. So these blue dots occur in real time. You can see here's the timing alert dot that is above the price bar. Here's the timing alert dot that's below the price bar. Now, as I said earlier, we're going to talk about three types of trades. Well, one of the trades is a trend trade. That means you're going to be trading with the VWAP. The VWAP is yellow. That means it's in an uptrend. So the condition is you can only trade timing alert dots that are below the price bars for a trend trade. So in other words, you could get in on this trade right here, this one here, this one here, this here, but you could not trade the timing alert dots above the price bars because this signals an uptrend and those would be taking short positions. So now we want to know, how are these timing alert dots going to facilitate our trades? What are the rules around taking a trend trade? Well, this clearly tells us when we can take a trend trade, but exactly how to take a trend trade is a different issue. And there's two different ways that you can take a trend trade within this system: the conservative way and then the immediate way. In the conservative way, when you get a trend, a timing alert dot, and you're taking that with an uptrend, and the same would apply if it were a gray VWAP and you were taking short positions or downtrend trades. When you're taking this trend trade in a conservative way, you would look at the high of this bar, which is 72.50, 28.72.50, and you would place your entry 2 points above that high for your entry. So that would make it at 74.50. So 74.50 would actually get you in right about here. So you'd go into 74.50, and if you went up to the high of this bar, that would be 76.50. You got in right here, 74.50. If you got in 76.50, that would be 2 points. Or if you stayed with the trade and went up, let's say, to this high, that is 77. So you're going to make two and a half points there. The other way to take the trade is the immediate way of taking the trade. And in the immediate way of taking the trade, you have a much tighter stop and also a greater reward, but then you potentially would get stopped out more often. But the way that you do the immediate trade is by using the range indicator here. And we can see the range indicator tells us how many dollars you're going to have a risk. In this case, 75. Here's your entry point right here at 72.50, and here's your stop at 71. So you're going to get in at 72.50, and if it goes down to 71, which would be a $75 loss, you're going to stop at that point. So we would be getting in, we would place our entry at 72.50, and 72.50 is actually where this opened. It went up to 72.75. So at this bar, we enter in 72.50, and the idea is to get in right on the next bar. So we place our order after this bar is completed. We place our order 72.50. This actually went up to 72.75. And the low of this bar is 71.75. So it never came down to our stop point. So you can see that that trade would have been successful. We got in 72.50 and it went up to 74.50. So there's 2 points. Or again, if you stayed in that, then you could have went up to this point, or you could have went up to this point, or you could have taken your profits with 2 points right at this point here. But once we get in the trade, what's the likelihood of a continuation in that direction? Well, it's hard to tell from like using an indicator like volume here, even though they say price follows momentum and momentum follows demand. Then we're going to add another factor to that. We're going to say price follows momentum, momentum follows demand, and demand follows volume, or the energy within the volume. It takes a lot of energy to have this high of a volume bar. So the energy within the volume, but this volume indicator really doesn't help tell us good information about what price is likely going to do. So we're going to need a proxy for volume. Now, let's go in and change this volume a little bit. We'll turn this off, and let's go in and we will turn this volume on. Now, this volume tells us a little bit more information. At least it's color-coded with the buying and selling bars, the green and the red bars. So it gives us a little bit more information, but still, even though we know that this was a high bar and this was a high bar of selling, it's very hard to tell what's going to happen with price by just looking at volume bars that are normally with a stock indicator from a platform. So we're actually going to need a proxy for it, and let's do that now. Let's go ahead and take that off, and okay, so we'll turn this on. And what this is this is the proxy for volume in this ProcessTrading.com right edge trading system. And you can see probably automatically how it gives you more information than a volume does immediately, because the way that trades work and that cycles work is that buyers come in, they push price up, they continue to push price up, and then there's a point where they're exhausted or they take a pause and price comes down. And this type of energy behind the volume indicator shows you that. You can see how it follows that same type of pattern where it goes up to a peak crescendos and then it starts to fall off. The way that you read this indicator is that the green bars are demand, the red bars are supply, and the gray bars show weakness. So here we have a strong demand coming in until it gets right to this point, and now we see weakness coming in. And we see that weakness continue down to here, where demand and supply are kind of balanced out, and then demand starts to come back in and push price back up till it gets up here. There's a little weakness here. Now weakness starts to come in here, and actually now the bears start to actually win the tug of war, really, because here is supply showing up, and then over here, clearly over here, it shows a weakness in supply, and you can see that weakness also in the histogram because the bars are getting shorter. This indicator also has these little underscores here, which the red show weakness and the yellow show strength at various moments in the price cycle. But still, we're looking to know what is the likelihood of the continuation as we see this trend. We're seeing it after the fact here. We see this trend continue to move up. But if we were at the right edge, how would we interpret that? Well, clearly we would interpret down here, it's not too hard. We're going to interpret it that it's going to keep going up because we see right here demand in the green energy bars showing that they're going to keep taking it up until it gets over here. Then we'd like to know what's going to happen. In other words, is this the start of a downtrend or is this simply a pullback? So let's add another factor to this indicator right here so that we can see that. And what we're going to do is we're going to add what we call, this is the effort line. Now you can think of this line as kind of a line that shows the tug of war between the bulls trying to keep it above the zero line and the bears trying to pull it down below the zero line. If it is above the zero line, then that's a good indication that price is going to continue. If it goes below the zero line, and let's see that, find that over here. If it goes below the zero line, then it's more that they're trying to keep price going in the negative direction. So when we look over here, we see that all through this uptrend that the effort or the behind the energy was above the zero line, so it's to the positive side of price and it's on the bullish side and it's going along with the trend. The trend is likely to continue. Now, this effort line has two colors to it, actually three colors. It has the red, and if it goes below the zero line, it's red. I mean, it's green up here. If it goes below the zero line, it's going to be red. And then it has the white. The white is simply a continuation of what color preceded it. So this is a continuation of the green colored line here, but the white indicates when there is a lessening of the effort. the effort is starting to lessen. And we see that a little bit. You can also look at it as in the slope. So you're taking into several things into consideration, that the effort still, even over here, is above the zero line. So of winning the tug of war to take price higher or take price lower, the bulls are still winning here because it's above the zero line. But clearly there's some lessening to the effort, and the bears have some traction within it, and we can see that traction here as the energy dips below the zero line, and we see that is shown within the price cycle here. Here was selling at the top, and it takes it all the way down. It takes it down to where there is supply coming in. You think of the green as demand, the red is supply coming in, and then there's buying at the bottom. Now, this energy also has colored bars to it. It has the magenta bar and the white bars, and then below it has the cyan bars and the white bar. Well, the magenta bars and the cyan bars are indications that there's positive energy in there and that it's trying to affect price to the upside. The white bars are that there is negative energy and they're trying to affect price to the downside. So even though the slope is down, we see that here the effort is still well above the zero line, and then over here we see that positive energy is starting to infiltrate the negative energy of the supply, and then here's the positive energy, weakness in the supply. The supply bars are getting shorter, and then of course we have demand or bullish bars coming in. Here we see a magenta bar suggesting it wants price to go higher as well, till we get over to here and we see a white bar which says that there's some negative energy there and it wants to take price lower. And in fact, we do see the energy bars start to diminish, and price does come down a bit. However, we can read these now as pullbacks because of the effort line and the other indications that we've read, along with the VWAP itself and the trend likely continuing, because remember the VWAP serves as a support and resistance line, so it's also support. So now we're starting to get a lot of information as to what is the trend, when is it overextended, when are we alerted that there's good points of entry into it, what's the likelihood that the energy behind it is still strong or weak. And so we can see we're getting a lot of information about when to take a trade and when to step aside from the trade or when to continue with the trade. So now what we need to know is, what is the measure of the demand? Here's the demand, here's the supply, and what is the measure of the demand, or what is the sentiment behind it, and what is the momentum of that sentiment? Well, we're going to find that out by turning on the sentiment oscillator. Okay, the sentiment oscillator is this indicator right here, and it's an oscillator with an upper bound, a lower bound, and a midline. And then the sentiment line is this dashed line, and the momentum line is this tricolored line, where it could be red if it's above the upper bound, green if it's below the lower bound, and white at other times. So we're looking at what is the sentiment of the oscillators, of the trading community. Well, that's this sentiment line here. And when this sentiment line is above the upper bound or within the upper half of the oscillator, that usually is a strong indication that the sentiment is to keep price advancing to the upside. When it crosses into the lower half, then just the opposite is true. The sentiment is starting to gain traction to take price to the downside. Now, the slope of this sentiment line is also significant. We can see that it's starting to slope down here towards the midline, and we can see this pullback here in price. So we look at the slope as well as its position within the oscillator. And you can think of this as the slower moving aspect or factor of price, because just like in here, we see within the energy, it stayed above the zero line, it stayed positive, and in fact, trend did continue to move up. Well, within the sentiment line, the sentiment of the trade and trading community changes a lot slower than the impulse and actually manipulation of price to pick up stops and run stops and that type of thing. So what we want to know is how the momentum affects it and if it's a pullback or it's the beginning of a trend. Well, here we look at the momentum line within the sentiment oscillator here, and let's look at the factors here. Anytime the sentiment or the momentum line crosses the sentiment line, then price tends to go in that direction. So right here, we can see it crossed and it's going down and price goes down. Right here, we can see it crossed and going down and price goes down. Right here, we can see it crossed and it's going up and price goes up. So anytime that it crosses, it's likely that price is going to go in that direction. But again, we want to know in relationship to all the other information that we've been told, how is this going to be applied? Well, we know now from the sentiment being pretty much above and in the upper half of the oscillator, we know the energy, how it's forming here, and that with the effort well above the zero line, we see that this is more likely a pullback, and we get a timing alert dot here. And we can see now that the timing alert dots, if they come when momentum went to the low point, in other words, below the low of the oscillator, and here is another timing alert dot where momentum is below the lower bound of the oscillator, then that would likely be an effective way to take one of the two trend trades, whether you're going to be conservative or immediate in taking these trend trades, because it was at the lower bound and it's going to move up. And in fact, that's what it does. So as we look up here, we see we could take this timing alert dot. Is that a good trade? Well, the effort is above it, and we did have a lot of demand coming in. Demand took a pause. The effort is still above it. Momentum has taken it down below the lower bounds. Sentiment is still high. And now it's starting to come up from the lower bound. The trend is up. So we have a good trend trade here. And the same is true of this one over here. Now, when we look at this dot, can we take this dot? We could trade this dot because our rules say when the VWAP is yellow, we can take any trend trade to the upside at a timing alert dot below the price bar. So, but if we look at this, we can see that right here, at this point, we have a couple things going on. The sentiment has just started to come down from the top, and it slopes down. Now, eventually, what sentiment will do, sentiment will always swing from the high to the low at some point, and then go back up. So it cycles like that. But it's a little bit different than the price cycles. So what we're looking for is the price cycles to give us a clue here. Now, we know this is selling at the top. And now we look at this. Is this selling at the top? Well, here we are with momentum at the top and price coming down through the sentiment line. So this is still selling at the top when we look at the cycle bars, as opposed to, so that gives us a mitigation to take this trade. We have selling at the top that we see right here. That's not buying at the bottom, that's selling at the top. We see that the energy is falling off of the demand. Demand is getting weaker here. We see the energy falling off. And we also see that the sentiment is starting to slope down. As opposed to over here, we have a timing alert dot. We have the VWAP in an uptrend color. We have buying at the bottom. We know it's at the bottom because we can see momentum down here in the green at the bottom. We have buying at the bottom, and we have positive energy coming into the supply side, and we also have the effort line still above the zero line. So this, and that's why this trade and this trade is a much more effective trade than this trade would be. You want to read all the signs together. And lastly, for the indicators below the price panel up there, we're going to add another indicator, and that we know that for every longer term trend, there's a shorter term trend. In other words, this is the longer intraday trend for day trading the E-mini, and this would be a shorter term trend, and this would be a shorter term trend. So that we know that every longer term trend will have its shorter term trends within it, and we want to look for that, and to do that, we're going to add the short term trend oscillator here. And we see that as a factor as well. So now let's add this into our analysis. We look at this potential trade right here, and we look down here to the short-term trend oscillator. The short-term trend oscillator does a couple things. It has an upper bound, it has a pullback line, I'll explain that in a minute, and then it has a lower bound. And these boundaries actually move and constrict. They expand and constrict. So they tell you about the volatility that's going on within the trading community. Right here, you see a lot of congestion area, and you see the upper and lower bounds constricting a lot here. That may be, a matter of fact, if they constrict too much, all these lines will turn yellow, and that just tells you that that's a no trading zone. But even right here, you may want to avoid this area simply because it's so constricted as far as its range and volatility goes. So that's one aspect of the oscillator. Then the other is the short-term trend line here. the short-term trend line has two colors to it. It's either going to be positive or it's going to be negative. And so the trend is either going to be up or it's going to be down. Now, let me explain that other line to it here. This is the pullback line. And a majority of the time, when it hits this line, price will come down to this line or come up to this line, and that is a pullback from the current trend, and then it goes in the opposite direction, just exactly like this did. This pulled back down to this pullback line, and we can see right here at this timing alert dot, is this a potential downtrend starting, or is it a pullback? Well, we know it's at the pullback line. So if it's a downtrend continuation, that's going to come through that line and continue on. But just as the line is suggesting, this is the pullback, and just like that, it did pull back. That was the pullback area, and then it went back up. As far as this alert dot here, which again we were mitigated from taking that by reading the price cycles and the sentiment. Now we look at it and we see that at this point in time, the short-term trend had just turned negative as well. So that's not working in our favor. This is not working in our favor. This is not working in our favor here. Now, as far as the short-term trend on this timing alert dot, it is negative, but it's at the pullback line. At this point, the momentum is below the lower bound and it's coming up. The sentiment is still in the upper half. We're seeing positive energy. The effort is still to take it up. So this is a much different reading, even in the short-term trend, because of its position within the oscillator and being near the pullback line. And we can see it's actually starting to pull up a little right at that point, much different than this. That's how we determine to take the highly probable and profitable trades rather than the others. But even if we were to take the others, even if we took this trade, what we have at risk here, if we have this would be a trade then to the upside, and if we took this trade, we would get in at 75.25 if we use the immediate type trade. If we use the conservative type trade, we get in 2 points above the high of this, and we would have never got in this trade. That's what the conservative type trade does for you. It keeps you out of potentially bad trades. It makes sure that you're buying into strength and selling into weakness, where the immediate trade limits you as far as your exposure. Like here is just $75. That's what you'd be losing if it hit your stop, as opposed to when you get into this trend, if you got in and stayed into it, and here it has you risking 1 or 2 ticks, which on discretion you might say, well, I'm going to be able to risk more than that. But if you got into this trade and stayed with this trade, the low of this trade, or the close of this trade, was 82, and this went up to, let's say you went up to there, 86, so that would be 4 points. So now we want to look at one more thing, and that would be how to take a contrarian trade. And to do that, you're going to need these contrabands. Now, let me go back to a point here. this white band above and below the VWAP, these are called the contrabands. And that is where you can take a contrarian trade. So for instance, this trade here, if you were going to take it to the downside, it would be a counter trend trade for sure, but it would not be what we classically call a contrarian trade, because to be a contrarian trade, you have to reach this line here, this contraband line, and the true is from the lower band as well. This then would be a discretionary trade if you were to take it to the downside. It wouldn't apply to the rules, the trending rules, because with a yellow VWAP you can only take trades that have a timing alert dot that are below the price bars. But from a discretionary standpoint, you can take any trade you want, and if you took this trade, it would be a discretionary trade, as opposed to when the price is above the contraband here, and you have a timing alert dot. You could take this trade, and it would be a contrarian trade, and you would follow the rules to that, just like you would the trend trades to the upside. And if you did it on the immediate way, here is what you would be placing at risk, $75. You would get in at the close, which is right here, 28.75.75, and if it went up to 77.25, you would exit if you maintain $75 as your limit. So when we look at this, we would get in at 75.75, 28.75.75, and we could stay in till price goes up to 77.25, which it didn't here. It went up, the high here was 77, so we can go up to 77.25. It didn't go up there. Here's a low of 75.25. So that's a couple ticks, And if you stayed in it till down here, it'd be 74.75. So that would be 3 points, So that is how you take contrarian trades, and you use all these other factors here, like, would this be a good contrarian trade? Well, not necessarily, because your short term trend is still green, your sentiment is high, your momentum is up here, you have strong energy, the effort is to keep it up. So this may not be a good place to get into it. But here as price went above the contraband, and if we looked at this, now we see selling at the top. The price cycle bars, we saw selling at the top over here. We see selling at the top. We can tell that here because momentum is at the top and it's starting to cross sentiment. We see the demand is starting to weaken. Even though the effort is still to keep it to the upside, demand is starting to weaken, and the short-term trend has now turned negative. So this would be a much better place to take the contrarian trade. The timing alert dot, in this case, rather than taking the immediate trade, you use it simply as an alert to be alerted to for a lookout for the proper place to take your trade by reading all the other indicators, and that would be right at this point here. So that's how the day trading system works for trading the EMINI. You can see the results over on processtrading.com. It goes over the right edge system. There's other videos and things over there. So if you want to, you can subscribe. That would be great. And you can also go over to processtrading.com. There is a contact form down at the bottom if you have any other comments or questions. So that's it for this video, and I'll catch you.